Hi, this is the Business Guy. The United States offers one of the best business environments in the world to start a hedge fund. Indeed, the industry has given generous tax breaks and has grown to over $1 trillion in assets under management. And it's not a bad way to make a living either. Of the top 10 hedge fund managers, the average income was $1.3 billion a year. Given the growth and popularity of the hedge fund industry, here are the general steps for establishing a U.S.-based hedge fund that checks off all the regulatory boxes. Here's a summary of what we'll talk about. What is a hedge fund? How to follow the correct procedure to legally establish a hedge fund to keep yourself out of trouble. The main regulatory tasks that must be done in order to start a new hedge fund. And oh yes, we'll also talk about starting a foreign hedge fund. Hi, I'm the Business Guy. I'm the CEO of Asset Protection Planners and Lawyers Limited. And if you appreciate this free information on how to start a hedge fund, please click the like button below so YouTube promotes it. Thanks so much. And you can also click the subscribe button below so that when more videos come out like this, you'll be up to date right away. What is a hedge fund? The term hedge fund refers to any type of private investment company that is operating under certain exemptions from registration requirements under the Securities Act of 1933 and the Investment Company Act of 1940. Given these exemptions, it is much easier to start a hedge fund firm rather than a firm that manages more highly regulated investment options such as mutual funds. The relaxed restrictions for hedge funds have helped bolster the growth of the hedge fund industry. Ironically, hedge funds may use investment strategies that have nothing to do with hedging, where, for example, you can buy a stock on one hand and then buy the corresponding put on the other hand. Now, puts can make money when the stock goes down, which can offset the losses of the stock that you bought, thus hedging your bet if the price falls. So you don't have to execute those types of hedge trades simply because it's called a hedge fund. The first step is to file the Articles of Incorporation, Articles of Organization, or Articles of Partnership for the hedge fund firm. That's where we come in. Our company files corporations, LLCs, and limited partnerships, both in the U.S. and internationally, that are a necessary part of the hedge fund formation process. So to take this crucial first step, give us a call and speak with one of our attorneys or consultants. Now, just to be clear, please don't call and ask about the details of starting a hedge fund. All the information we can provide is already in this video. All we can do is set up the companies. You can hire an attorney for the other registration details. We're the place to call to set up a company. In order to start a hedge fund in the United States, two business entities typically need to be formed. The first entity is created for the hedge fund itself, and the second entity is created for the hedge fund investment manager. The hedge fund is typically set up as either a limited partnership or an LLC. In most cases, hedge funds are formed as limited partnerships. The general partner is usually an LLC that we establish to manage the limited partnership. Regardless of the physical location of the firm, many hedge funds are formed in Delaware because of the business-friendly laws. However, other states have introduced business-friendly provisions to help make their states more competitive with Delaware. Our favorite by far is Wyoming because of the legal protections they offer and the reasonable initial and annual fees. We also register hedge funds offshore, such as the Cayman Islands. The main benefits are as follows. Number one, for clients from other countries that don't tax worldwide income, there may be some tax benefits. There are no tax benefits for U.S. people, however. Number two, the regulations are lighter in the Cayman Islands than they are in the U.S. And number three, people seeking asset protection from lawsuits, investing with you offshore inside of an offshore asset protection trust, such as the type of trust we set up to protect assets from lawsuits, will offer them protection from having their assets taken by a legal enemy. So you can call us to establish the proper business structure for your hedge fund firm. You'll need to give us a name that you want to call your company. We have a free naming tool on our website, and I'll try to remember to put that link in the description. You will begin by using the company name to complete the necessary legal paperwork. So that's why it's so important to call us early in the process to set up the companies, because you'll need your company name in order to file the other registration documents. In addition, the new firm will need to apply for a federal employer identification number with the IRS. The FEIN can be obtained for free by applying on the IRS's website or by filling out the SS4 form. You can see our video on filling out an SS4 form if you need some guidance. Next, write the hedge fund firm's corporate bylaws. There are template bylaws that you can utilize. At a minimum, the hedge fund firm's bylaws should include a mission statement, a compliance manual, an ethical code of conduct, a manual for supervisory procedures, and an advisor portfolio management agreement. Register the company as an investment advisor. In order to establish a legal partnership, the company must register as an investment advisor. Do this by going to the Investment Advisor Registration Depository website, IARD. This process is free and can be completed over the internet. A registered investment advisor, RIA, is a firm that advises high net worth individuals on investments and manages their portfolios. RIAs have a fiduciary duty to their clients, which means they have a fundamental obligation to provide investment advice that always acts in their clients' best interests. Next, you'll register the hedge fund firm's representatives as investment advisors. If the hedge fund is going to operate as a going concern, some of the representatives will likely need to register as investment advisors with the U.S. Securities and Exchange Commission. Representatives can register as an investment advisor by visiting the IARD website. Representatives can also check with the Secretary of State in the state of incorporation for more information. In order to register as an investment advisor, the representatives will need to take the Financial Industry Regulation or FINRA Series 65 regulatory exam, which will test the representative's knowledge of security laws and practices as well as understanding ethics. After passing the exam, the representative will be a licensed investment advisor with the state. The fee to take the FINRA Series 65 exam is relatively inexpensive. Next, register the hedge fund offering with the SEC. The hedge fund will also need to register the offering of the limited partnership with the SEC. Whereas corporations offer stock and LLCs offer membership, limited partnerships offer partnership interest. To register the hedge fund with the SEC, complete the SEC Form D in each state in which the hedge fund will be offered. The offering will name the key partners of the firm, as well as identify large investors and the fund's primary investment strategy and investment approach. Comply with the consumer protections provisions. As a result of the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010, hedge fund managers are subject to registration and reporting requirements. However, if the manager has less than $25 million in assets under management, the manager is not eligible for SEC registration and must look to the laws of the advisor's home state to determine registration and licensing requirements. Advisors registered in their home state can avoid the SEC registration until they reach the $100 million in assets under management mark. Once they reach the $100 million mark, hedge fund managers will need to complete Form ADV, which contains basic information about the advisor's owners and affiliates, certain business activities that may give rise to conflicts of interest with clients, information about the private funds the advisor manages, and disciplinary information about the firm and its employees. If the manager registers with the SEC as an investment advisor, the representative will need to complete SEC Form PF if the hedge fund has assets of at least $150 million in private fund assets under management. SEC Form PF is a comprehensive document that will take a fair amount of time to complete and requires a fee for filing. Hiring good legal counsel is an investment. That said, this is meant to be helpful information only, and none of the information on this video is legal or investment advice. For that, you'll need to consult with an experienced hedge fund lawyer to help you avoid the pitfalls and build relationships, by the way, that will bring you into networking events such as private capital introduction dinners. Doing so will also allow others in the industry to see that you are investing in your own business because you aim to be in the industry for the long haul. Marketing the hedge fund to potential investors. The rules that govern the marketing activities for hedge funds have changed as a result of the Jumpstart Our Business Startups Act of 2012, or JOBS Act. As a result of these changes, hedge fund managers have greater flexibility in marketing their hedge fund to potential investors. In the United States, hedge funds can be legally marketed to investors that satisfy certain standards of sophistication. In addition, hedge funds can be marketed to the general public provided all purchases are accredited investors and certain other conditions are met. According to the SEC, an insurer cannot rely on both Rule 506B, which refers to private placements, and Rule 506C, which permits issuers to broadly solicit or advertise their offerings in the same offering. The bottom line, the complexity of starting a hedge fund is dependent upon the number of investors invested in the fund, the amount of assets under management, and the complexity of the hedge fund strategy for investors. There are a few hoops and hurdles to establishing a hedge fund in the United States, but these are easily understood. The greater challenge will be in raising the necessary investment capital to operate the hedge fund firm as a going concern and generating consistent hedge fund investment returns that outperform the representative benchmark proxy of the net of fee basis over time. If you appreciate this information, please click like and subscribe. See you next time. This is The Business Guy.